Prorations is a big deal that I think a lot of people working with first-time business owners that are buying and selling just aren't ready for.
Yeah, that's crazy. I didn't think about it from, with our company, the purchase of the company, it's like 99% digital. But when you're talking about purchasing physical assets like that, there's a lot of variables from the moment you sign to the day it gets handed to you.
And I mean, even for your business though, well, maybe not because you're mostly digital. I mean, you could still factor in things like annual software subscriptions where, hey, you already prepaid for some of their stuff that is now should be expenses for them in the future, the person that you're selling to. Or if you have physical property, real estate taxes, right? Like, well, I've already paid the full year bill, or I haven't paid this year's bill. So even though I sold in July, you're actually going to be paying for all the property taxes at the end of the year. So we got to take that out of my cut. So prorations is a big deal at close that a lot of people aren't prepared for.
This is why you get paid the big bucks, man. This is that's really good.
It's almost like I know things. Who'd have thunk?
Yeah.
Look at you. You built your firm into a one-person empire, but now you're stuck trying to figure out how to scale to those next employees, add new services like advisory, tax prep, tax strategy, or really just level up your systems. Well, look no further than the Firm Foundation. Yes, we've taken everything we've learned in our 4 years building a 7-figure firm and bottled it up for you to replicate and put in place right away. Head over to thefirm.foundation and use the code UnAccountable for your special discount. We'll see you there.
Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your returning regular of a host, Tyler Otto. I was out for a few weeks there, but I'm joined today by the obvious upgrade, Jaime Rodriguez, filling in for Jeremy Van Grohl, who he's off on vacation with the family now. Jaime, welcome back to the show.
Thanks, man. Thank you so much for having me. It's nice to be on this side. And if I'm not mistaken, you told me Jeremy is he's leaving. He's doing OnlyFans only now or something like that, right?
That's exactly it. He's really taken the content game to a different level. We wish him the best of luck. And, hopefully we'll have him back one day, just a where are they now sort of thing. So for those that don't know, Jaime Rodriguez, you are the owner of bookkeepers.com. The BL Bookkeeper launched famous product, the Digital Bookkeepers Association, which we'll get into in a bit. Also have your own firm doing bookkeeping for lawyers, particularly immigration. Like, did I miss anything else? Do you also have some sort of water park you just started up or anything else we need to cover?
Just sold it, actually. Just sold the water park. No. Maybe in the future, I've purchased the Dallas Mavericks. How about that? We'll add that to my, I need to add that to my LinkedIn, actually.
Future Mavericks owner. I like it. Visualize it, see it. Jaime, for those listeners know, Jaime has been a longtime friend of ours. Jeremy and I started our firms with the Bookkeeper Launch program, as did Jaime. Jeremy and I went on to do a Media Coach podcast, and Jaime bought the business and is doing cool stuff. So he definitely up-levels our credibility. So, dude, it's just fun to have a friend on here. Like, this is not a guest to me. This is a friend.
Yeah, man. Thank you so much for having me. This is fun. This is a lot of fun. I think the first time I was on, I was nervous as heck. I was like, these guys are going to make me look like a fool, and which doesn't take much. But man, you guys grilled me. I've told you guys, this is just the best podcast in the industry. So it's an honor to be here.
People, this is how you get on the podcast. You just have to stroke our egos just a little bit. Just a little bit. Well, Jaime, I want to start off this week with In the News. And there is a great article out there. I don't know if you saw this, but, many of you know Sasan Gadzari. He's the CEO of Intuit right now, QuickBooks. And his most recent announcement is coming out saying that accountants going forward are no longer a channel for sales. They are the customer, not the clients, that we are the product, the accountants. And one of the biggest things that they said is that we are here to partner with you, not compete with you. So much that they are walking back an old policy where now if an accountant is attached to a QuickBooks file, they will no longer in any way, shape, or form show QuickBooks Live bookkeeping as an option. They're going to stop selling against us. Jaime, I don't know if you saw this, but like for years, Sasan has been leading the charge of we're the enemy. I know they won't say this, but they led the fire your accountant campaign and constantly. What brings this on? Because in my opinion, it could be that Intuit stock has been plummeting and we're all angry and ready to leave them. Is he trying to make mea culpas before he's booted? Or I don't know. What do you think?
Gosh, yeah, I don't know. I don't know what the motive is. I think it's the right thing, though. I think it's the right thing to do. What I hope it was is that he realized there was a mistake, and now this is him trying to fix it. I think I'm okay with that, right? I'm okay with somebody saying, "Hey, we screwed up. We shouldn't have done that. Let's go back to where we were and repair this relationship." Because, yeah, I think a lot of us were pissed off that our clients are getting these advertisements for QuickBooks Live, our literal competitors.
Yeah. I mean, we were putting clients on QuickBooks and then they would start seeing these buttons for get live bookkeeping and, oh, it's so much cheaper than what I'm getting now. And now clients are like, well, I want a price match to this cheap, crappy online service, even though they're not going to do half the things you guys are. I mean, I love it, but at the same point, I'm not sure I believe it because if history is the best indicator of anything, like Sasan since day one, I just have a hard time trusting someone who has shown us that many times they don't care. I think it's the right move for Intuit overall. And if someone else were to step into leadership chanting the same thing, I think I'd believe it more.
Yeah. And, you and I have talked about this in the past where, to use your analogy, I think you said we have all these bookkeepers and accountants with just like picket forks and ready to go to the next ledger software. How much of it is that, right? How much of it is Intuit realizing like, holy crap, we better make amends with these people because they are ready to leave and they're taking their entire clientele with them.
Yeah, I think the barrier to someone catching up to QuickBooks now that AI can program and code and all these other systems are catching up, it's like no longer is their technology going to be the moat. It needs to be the relationships that keep us sticky. And I mean, it's the right move, but I'm guessing Sasan's in deep water. Like he's on the hot seat. And I mean, he's been there a while. The stock's plummeting. I don't know. That's my guess. And it's the right answer, but just maybe too little too late. But
yeah. I guess we'll see where this goes.
Beyond that, no other major in the news this week because I wanted to leave some time to play some games. I'm going to call out Jeremy and Beth because Beth filled in for me while I was in Hawaii. And it was like 40 minutes into the episode before they did the first game. So shots fired right now, Jeremy and Beth. We're going to jump right into the first game, Jaime. And you came prepared this week. What do we got?
All right, Tyler, I got a game for you that I'm calling Fraud or Fiction. At least that's what ChatGPT helped me come up with. Not very intuitive.
I love alliteration. I'm here for it.
All right. So basically what I'm going to do, the rules are I'm going to give you 7 different scenarios. We'll go through each one by one. And you need to tell me whether you think this is something that actually happened or if it's totally, completely made up. So we'll start, if you're ready, we'll start with a T-ball here. So this is in between 2002 and 2016. So pretty long time this is happening. A large U.S. bank puts so much pressure on employees to hit sales goals that workers secretly opened millions of checking accounts, savings accounts, and credit cards for customers without their knowledge. In many cases, small amounts of money were even transferred between accounts just to make them appear active. Is this fraud or fiction?
This sounds very familiar. We're going to go with fraud.
It is definitely fraud. It is true. You get bonus points if you can tell me what the company is.
Wells Fargo?
Wells Fargo it is, yeah. So what's interesting about this is that this is happening not necessarily because of poor internal controls, but just poor incentives. And that kind of makes me think, like, has there ever been a situation where you maybe didn't know how to incentivize your team, or maybe did incentivize them and thought, hey, this probably isn't the best way to do this?
Yeah. No, I think that's a fantastic question because one of the things we teach in Firm Foundation, and I did for several years at my firm, is a bonus structure. And we always bonus based on several criteria. And I let my team help figure that out. Part of it was filling out the monthly culture survey in Gusto so I could just see how my company culture is faring. We didn't have to get a good score. It just had to be filled out by everyone. And then we also did things about like completing monthly closes on time. But what I realized then is it just incentivized people to switch the button over to close without doing the work. And, you know, we've had different things throughout the year, tracking time according to clients, and it's been hard. And all that being said, like they've been good incentives to track because they have made the company better. But we actually this year are trying something new. We went to profit share because, you know, we fire bad clients, we bring on more. And I wanted the team to feel the downside of if we fire bad clients, like, hey, cool, we'll get rid of people that suck, but also this hurts the bottom line. And like, I want you to feel that. Or, hey, we're going to take on more work, more clients. Great. I want you guys to feel the upside.
Yeah.
And so with that being said, that's kind of how we focused our incentives. Cause you're right. Like you have to think about, is someone going to be motivated to do something different than the intended outcome?
I mean, I guess this is where internal controls come in place. If you don't have a good internal controls with your CRM or whatever reporting software you're using to measure success, it's very, very easy to manipulate it as well.
Oh, yeah. So. It's kind of funny because this made me think of, we were driving back from camping over the weekend, and my kids were fighting over a maze book in the back, and you know my littlest was freaking out. He's like, "Oh, Porter's gonna, you know, I don't want him to do anything on my pages." My wife's like, "Hey, Porter, just don't touch the pages. Luke's already colored on. You can have it in 5 minutes." I'm like, "This thing's huge." What did Luke hear? My 5-year-old already goes through and marks on every page in the next 5 minutes to make sure his brother doesn't do anything. And it's like, that was not the spirit, and we just incentivized him to destroy the entire book to protect it for himself. And it's like, that's the same thing when you, like, you've got to think through what are they going to do to protect their own self.
Yeah. You got to think like 3 steps ahead. Awesome. So here's another one. A manufacturing company fell short of its earnings forecast. So executives instructed the accounting department to classify over $250 million of inventory as museum assets or collection assets, arguing that the equipment has historical value and therefore shouldn't be expensed or written down. Is this fraud or fiction?
I've never heard of this, but I like it so much as a story. I really hope this
I thought you were going to say, like, I love this for fraud. Like, this is just really, like, smart fraud here.
I like trying to reclassify inventory expenses now as valuable assets, because then, especially if you go to try to sell, like, you just, wow, I like it. I want it to be fraud.
It is fiction. It is. This did not occur. But you know what's interesting? This is something that I've never dealt with my clients, and so I actually had to look up because I was like, what the heck a collection asset is or a museum asset? I don't know if you're familiar with the term or if you in the industry that you work in, if this is common.
I mean, it's a tangible asset, right? Like it's asset value that, you know, doesn't depreciate, can actually grow with time. It's almost like, I wonder how zoos value animals on the balance sheet. I guess they can't buy and sell them. I don't know, but it's like almost the same thing, right? Like it's an asset you're making money off of that doesn't depreciate.
Yeah, the biggest thing about it is that it doesn't depreciate. So essentially that asset is just sitting in the balance sheet forever. And so unlike inventory, where eventually it turns into revenue, this doesn't. This just sits in your balance sheet forever. So
well, unless you sell the asset, then you might have a gain, right? Because then, you know, whatever you acquired it for. So it could be, I almost think it, like, doesn't it just get treated just like an investment?
Pretty much. So one of the most common ones, and obviously like any museum will have this, and that's hence the term museum asset, but like the Mona Lisa, right? Like that's just sitting there with no intention of being sold anytime soon. So it is just sitting in the balance sheet for whatever the cost was originally.
Interesting. Okay.
Yeah.
I like it.
All right, here's another one. A telecommunications company missed its profit targets. So instead of recording billions of dollars in routine operating expenses, management recorded those costs as long-term assets. Profits instantly looked much, much better on paper. Is this fraud or fiction?
I'm saying this because whether or not it is fiction, I know people have done this. So I'm going with fact, even if this one's Or this one's fiction, regardless of what you say.
So
it's fraud. It's fraud. Yeah, yes.
Yes, this is fraud. This did really happen. Way to go. Bonus points if you can figure out who the company is. It's a hint. It has to do with telecommunications. I guess I told you that already.
AT&T?
Not AT&T. It's WorldCom. And
Okay.
this happened from 1999 through 2002. So, this is probably the most common version of fraud that you'll see in bookkeeping. So, obviously, something that has to be where you have to dot your T's, cross your I's.
Yeah. Yeah. This is where the BRA test comes into. In the IRS guidelines, it's listed as the bar test because you have to look at the expense and is it a betterment, an adaptation, or a restoration? But it lists it in the order of BRA. So there you go. Betterment, restoration, adaptation. So
yeah. And a ton of, I mean, you're talking about millions of dollars of essentially tax evasion there, which is crazy. All right. Next one, every Friday, the controller of a company rounded every expense account down to the nearest $1,000 because he believed small differences even out over time. After several years, the company had overstated profits by nearly $40 million. Fraud or fiction?
Well, if he rounded it down, where did he put it? On the balance sheet? Just sitting there somewhere?
I guess this is where you figure out whether this is fraud or fiction.
I'm going to go with fiction because if you're going to round down, you got to put the offsetting entry somewhere, and I think someone's going to catch that.
This is your bookkeeping brain working really, really well here, Tyler. You are correct. This is absolutely fiction. Yeah. So, yeah, when you obviously, if you understand double entry accounting, you understand that you can't just get rid of something. It's if you're taking something from an account, it's got to go somewhere. It doesn't just magically get deleted. So, but this is one of those things where the materiality rule comes into play, right? There are times where there is a rounding error, and typically it's pennies. If by the end of the year we have $1, I'd be surprised, right? Like it's literally immaterial. So if you're just rounding every single day or every week, that's going to add up pretty quick.
I mean, for us, we got quite a few clients. We're in the hospitality space and they have cash clearing accounts, right? Like they say in the point of sale, they collected X amount of cash, but then they have this nasty habit of, guest is there. Someone needs to run out and run to Home Depot to get them whatever they want because they want to get the guest happy. So they take cash from the till and they go buy it. And next thing you know, we do cash clearing and like, we're short $80, we're short $40. And the clients look like, I don't know. We're not going to spend the time to look into it. We just cash over short it like crazy because all we know is you said you recorded this amount got deposited. And so many new team members I get are like, hey, Tyler, I put like 6 hours of brain work into this. I can't figure out why it doesn't reconcile. I'm like, no. Like if after 10 minutes you can't figure out why cash clearing doesn't reconcile, you post it to cash over short and flag it for the client because the money could just be missing. That's the answer.
Yeah. And so, and there's also like those situations where you see a transaction come through and you ask your client, hey, what the heck is this transaction? And they're like, I don't know. I don't remember that. And it's like, well, it was $3. What do we really care where like, sure, we'll give it a shot. We'll ask the client, we'll look it up to see where this transaction should go. But at the end of the day, materiality comes into play. But in this fake situation, it's way too much. 40 million. I would say for most companies, that is not immaterial.
And sometimes even if, it's a $3 charge at our company, if we're already waiting on 15 other questions from the clients, don't even ask the $3 one. Like, let's get the answers we need. We're just going to guess on $3.
Yeah. Spoken like somebody that's worked with clients before, because your clients will answer that one question. They will answer that one and forget all the others. And you're like, this is literally the least priority question that I had.
Yep. Yeah, don't give them too much. Simplify it if you can. Make guesses. I love this. All right.
Oh, yeah. All right. Next one. Question number 5. Executives demanded that their accountants make the numbers work before quarterly reports were issued. When earnings came too low, accountants entered manual journal entries that increased revenue and assets until the financial statements matched management's expectations. Did this ever happen? Is this real or fiction?
I can't give you a name of who it was, but I know this has happened before.
Yeah. It is absolutely real. You got it. This was Health South from 1996 through 2002, which I think really, I think this is a very common scenario where accountants or bookkeepers and even tax preparers face the pressure from clients from saying like, hey, I can't pay that, or like there's no way that the reports are what they are because my bank account doesn't show it, and you feel that real pressure. I know I have.
I've had tax strategy clients that like consult with us, and we're seeing if we're going to work together, and they're like, yeah, my current accountant's not that great, and I'm just looking for someone, at the end of the year, I'll get you the documents, I'll tell you what the numbers need to be for the year for everything we're doing, and you got to make it work. I'm like, no, that is not how we're working. Like, most accountants I talk to, they can figure it out, but we need this year the number to be 3 million. I'm like, cool. Yeah, that's not how I work. I'll tell you what the number is. So yeah, I've had prospects wanting me to do this. And if prospects have wanted me to do this, I guarantee you there have been accountants said, sure, we'll do that for you.
Oh yeah, yeah, absolutely. All right, Tyler, I think you got one wrong out of these. So we got two more. Let's see if I can get you to get one more wrong here. That's my goal.
Okay.
You're looking too smart. I don't like it. All right. A startup argued that employees became less productive over time. So management created an internal employee depreciation schedule and attempted to capitalize recruiting cost while depreciating each employee over 5 years. Fraud or fiction?
I really hope this is fraud because I want to hear more about this story. I'm going to say fraud.
It is fiction. Yeah. So yeah, this is a very creative way to depreciate assets, I guess. I don't want to go.
In theory, it works though. Like the earlier one, I'm like, bookkeeping brain, that doesn't account. Like you can't do that. This one, yeah, you could take those expenses, put them in assets. Because like I used to work at ski resorts, and when we would put in lifts, we would also capitalize the labor of the installation and expense that over time. So what you're saying here mechanically works. You could argue, yes, we're going to create this weird recruiting asset labor thing and then amortize it. Dude, I wanted that to be real. I wanted to hear a story here.
I'm sure maybe somebody out there is doing this. Somebody, bookkeepers listening to this, don't do it. But I don't know. Somebody might be doing this. All right, last one, Tyler. Executives at a public company intentionally kept billions of dollars in obligations off the balance sheet by moving them into separate legal entities. And investors believed the company was financially healthy because the debt wasn't visible in its reported financial statements. Is this fraud or fiction?
I'm going to go ahead and say Enron.
Enron. Got it. You get like double points for that. You have to. Yeah.
Mark to market accounting, man.
Nailed it, man. So yeah, what is that? That puts you at 2 wrong, 5 correct. Hey, that's more than 50%. That's passing.
Dude, Enron has some of the best documentaries out there about when they switched that whole mark to market accounting and they got to like make up their own revenue numbers, and then they started shifting it. That's crazy. Dude, I will say even some of this fraud stuff, when I worked back in corporate hospitality, not our hotel, but another hotel in the chain, in the brand, it was February, and all of a sudden their director of finance gets fired. And I'm like, why? He was a good guy. Like everything's going well. Come to find out, so we got bonused all the way up into 120% of net profit. So like our bonus climbed. Once we hit 120%, we maxed out on the extra bonus we could get. They did like 128% of profit. So he had the brilliant idea. Well, let's just accrue that revenue into next year because we're already off to a rough start for, the following year. What is it? Like right now it would be like, let's accrue it into 2027 because we've already met our targets for 2026. And he shifted revenue by years so that ownership would have to pay out the profit on the bonus for the next year. Got caught. Holy smokes, man. I've never seen someone fired so quick in my life.
Yeah, I can imagine. That's crazy. And I mean, it kind of goes back to the internal controls. I mean, you gotta have the courage, I guess. I don't know,
the stones.
To do something like that and like not get caught and expect nobody to look at the books and be like, hey, this looks a little fishy.
Yeah, courage isn't even the right word. It's like the audacity.
Yeah.
Yeah, to really think like this is okay and I should do that. But man, somehow, I mean, he had the means, he had the justification. I'm like, well, it's still the same revenue. I'm still reporting it. Moved it from December to January. No big deal.
That's a good way to justify it for yourself, I guess.
Yeah, well,
helps them sleep at night.
Good luck with the unemployment line, but
yeah.
Jaime, excellent game, sir. Thank you for that. And already we're at halftime.
Are you a solo bookkeeper owner or just starting to build your team? Then you need to check out our friends at bookkeepers.com. I know what you're thinking. Jeremy, you and Tyler went through this program and you guys are inept at best, but thousands of students have gone through there and actually created fantastic firms and the freedom that they've been looking for in their lives. So, a couple options that they have out there right now: the Digital Bookkeepers Association, low price. Not only does this let you learn or teach you how to scale your business, especially if you're hiring for the first time, they have bi-weekly experts come in and lead all sorts of topics with questions that you have out there. The other thing I love about this is that they have a directory of other members here where if they're not in your niche, you send them to this directory and they can find a quality accountant to work with them or bookkeeper. Other one, they are just started the AI bookkeeping membership, right? And I know AI's out there, but how do we start? This is the place to go, right? Give you the foundations, think about workflows, using AI tools, the training, again, recorded and live trainings, a private community where you can ask these questions. And as we've said so many times on the show, it's the community that gets you ahead faster. So please, if you're at that point, solopreneurs looking to grow your business, check out our friends at bookkeeper.com or email them at success@bookkeepers.com.
And because I like to delegate / relinquish any sort of work on my part, Jaime, you're also bringing the app snap for the week. What are we doing?
Yeah, so this is something, you asked me about an app that I use or that I wanted to talk about. This is not something that's actually directly for bookkeepers or even accountants. It's really more of a customer service agent, and it's Help Scout. It's a shared inbox, and I know Jeremy shared one recently, and it kind of made me think about this. And this is one of those things that I love Double, but this is one of those areas where I wish that Double would improve, and I would totally move all of my inbox into Double. But what I like about Help Scout is that it gives you accountability. It gives all of our employees accountability. You can run reports. You can see how quickly people are getting answered. You can look at any email that hasn't been answered. You can look at satisfaction ratings. You can look at the workload, not only for your employees, but do you have a client that is emailing an insane amount per month? You can look at how many times they've emailed and all of the back and forth. So you can pull reports out very easily. And the thing that I like the most about it is that because it's in one central location, when an employee is out for vacation or whatever, you can still see all those emails coming in. You're not having to dig through somebody's personal email inbox that you have. You have one shared inbox, and it just makes it really easy to just be able to assign it to your employees. And this is something that we use in bookkeepers.com for all of our students. And I liked it so much that I started using it for my bookkeeping firm as well, because I just thought it's very easy to use. I've tested a couple of different ones and I just thought they were a little, I don't know, complex. And I'm like, this is just email, guys. Like, why are we overcomplicating this? I don't need a ton of AI for this. I just need a central location where in a command center where emails come in and I can assign it to employees and see how fast it's how efficient my firm is being run from the email standpoint.
I wholeheartedly agree. Like, practice management systems are going to have to figure this out soon. I mean, this is what I would argue Carbon, the practice management system, does better than anyone else. Their triage system is insane. And I think one of the coolest things about them is, at least on Carbon's triage, like, it factors in portal, it factors in email, factors in text. It's funny, I was talking with one of the high-ups at Carbon, and he said, we're lucky we built triage because if we would have known how much work it would have been, we probably wouldn't have done it. So they had the luck of going into it ignorant. But yeah, I mean, I would love to see everyone else do this. You know, it's funny, though. You say it's not for bookkeeping firms. I believe our friends Daniel and Melissa use this for their
They're using
firm.
Help Scout as well. Okay.
Yeah. But Jeremy was talking about, was it Missive a couple weeks ago that he started using? So, I mean, I get it. Like, being able to triage the client communication, honestly, I would look at something like this. But we have had the world's most productive campaign of clients who want support, go through the portal.
Yeah.
And I think that's the only way around it. If you're going to do email heavy, which I see the argument for because you want to meet clients where they're at, you need a tool like this.
Yeah, yeah, and that's actually a really good point, because if you are using a portal like Double's portal, and you stick to your guns and you're saying this is how we're communicating is through the portal, then you have no use for something like this. But if you have essentially built your firm, which I have, through email, it's, we talk about how difficult it is to train clients to do something new. It's just that much difficult, if not more difficult, to train myself to do that.
Oh, wholeheartedly agree. And I think for us, when we tried to make that push 3 years ago, existing clients really fought back. But slowly, as you add new clients, you train them once and you say, hey, from day one, this is where you get a hold of us. And then they're great because, oh, this is how I learned to communicate with my accounting firm. So, yeah, I love solutions like this because especially it keeps you platform agnostic going forward for a portal, right? You could switch to any other practice management system and keep Help Scout as.
Yeah, I've tried different like communication styles too. Like I tried using Slack, where I would create a channel for each client. Holy crap, what a mess.
Yeah.
Yeah. And now they have a direct line, which feels like a text message when they need you. So the difference between email, like the mental difference between email and Slack, is that Slack seems a little more instant. You almost want instant support, versus email, you understand, like, well, they'll read it eventually, right? You're not expecting an immediate answer. So that was a mess. Thankfully, it lasted about 2 months, and then I was like, this is crazy. There's no way I'm doing this.
Yeah. Honestly, I think that's one of the most intentional things Ben and Kenny have done at Double and several others is that none of us want our clients to expect synchronous communication, right? We want asynchronous. We want it offline. We want it, hey, we'll get back to you at our timing that we can. Because otherwise, yeah, that expectation of it's like, hey, I'm going to be in the chat with you right away at all times. Man, that's going to drive you, your staff, everyone crazy.
Yeah. Oh, yeah.
Well, for those interested in Help Scout, helpscout.com, easy to find. Looks like they start as cheap as $25 a month a user, all the way up to $75 a month a user, with everything in between, AI answers. I mean, the world's changing so quickly right now, but unless, Jaime, you got a promo code you need to put out there.
I don't actually. This is just one of those apps that I'm like, both companies would probably crumble without it, and I don't have a promo code. This is just something that I believe in, and I think it's a really cool solution.
All right, well, on to the next game then. And Jaime, I now get to quiz you in back-to-back games, and this will be fun because my first game I am going to name after an NSYNC classic. It is Baby Bye Bye Bye. Yes, we're going to talk all about buying businesses today in Bye Bye Bye. Jaime, are you ready, sir? You have a little experience in this. I feel like you could do okay.
I have some experience in this, yeah.
All right. Well, let's jump right into it then, because question one, when Jeremy goes to buy a new business, Big J's Poodle Shaving Shop, he will assume the prior owner's tax ID. What kind of purchase is this? Is it a stock purchase, an asset purchase, a simple purchase, or a going concern purchase?
This sounds like going concern, but I don't know. I know for sure it's not the asset purchase.
No, it is a stock purchase because he's assuming the tax ID and therefore assuming the company of Big J's Poodle Shaving Shop. He is essentially taking over an existing company. He's not creating a new one. He's just continuing it on. So a stock purchase, essentially he's buying the stock, the ownership of the prior owner. In contrast to question two, when Tyler buys the business, Big T's Tank Tops, and buys the physical retail space, the branding, the inventory, the supplier contracts, the point of sale subscription, and all the other items associated with it, what type of business purchase is this known as? A smart purchase, an asset purchase, a simple purchase, or a going concern purchase?
It might be a smart purchase, but it's an asset purchase.
That is 100% correct. And that's where we're going to live today, is an asset purchase versus a stock purchase. Because, again, hotels, I see a lot of these. And the big thing to know is a stock purchase is you are inheriting their entire business. You are buying everything in it. Whereas an asset purchase, you create a new business, new tax ID, set it up, it starts today, and you buy all their assets and roll it into your business, which could include the company name, the DBA, the employees, everything, just not tax ID and all its history. Which I don't know if you care to share. What was that like when you bought a business? Did you guys have any direction from your lawyers as to which one to do?
Yeah, definitely had direction from both lawyers, from both parties, and we both pretty much knew what we wanted. Went to our attorneys, and they're like, "Yeah, this sounds like the best thing." And I think it's one of those that's like, what's the safest thing for both parties? And I think the best, I guess it depends on the company and everything else that comes with it. And I guess this is a question for you if you know the answer. What is the benefit of keeping somebody's EIN number? Like, what exactly would be the reason for it?
I could tell you, but it might spoil two of my upcoming questions, so I'll tell you after.
We'll talk about it after.
Do you mind if I ask what you guys ended up going with?
Yeah, it was an asset purchase.
I like it.
And that's kind of where I think it's just the safer one. If there's anything that came with the company, any debt, it doesn't transfer over. It's quite literally a purchase of assets.
I mean, you're going to do well in the rest of these questions. Question 3. At the time of close, when Jaime goes to buy the north of the border water park, do you also have some sort of water park you just started up or anything else we need to cover?
Just sold it, actually. Just sold the water park. Yeah.
Jaime and the old owner will go through the process of counting the cash in the drawers, counting the extra towels and inventory of food in the concession stand on the day of close, as well as all those other influx tangible items. What process is that called? Is that A, allocations, B, prorations, or C, inheritance?
It sounds like allocations.
I'm going to give you the ding. We call it prorations. And this is the process of, you go through all the negotiations, you figure out the purchase price, okay, we're going to close this deal for $2 million. But then we go there on the day of and we come to find out you've got, a normal water park has 2x of its daily towel supplies that it needs to have on hand, and you have 6x. Well, Jaime, now I need to give you back that money because you over ordered. And maybe you even had a gas station on site. And it's like, if the tank is full and whatnot, then okay, I've got to reduce from the amount of money I get from you, the amount, because I've already paid for the fuel and the cash on site. Like, we're not going to have you just walk out with all the cash in the register. We're just going to say, oh, cool, that's your cash, you're giving it to me. We'll include it in the final closeout price. And so prorations is one of those things that if you don't have a broker working with you or an accountant that's seasoned, a lot of times people miss this. And again, hotels, we see this a lot, where in most contracts, it's, hey, at time of sale, you'll have 2x of bedding supplies, right? And if we show up and there's only 1.2 of all bedding needed, it's like, oh, we need to deduct that from the sale price because you did not leave us in good state. I'm going to have to go buy all of that. So prorations is a big deal that I think a lot of people working with first-time business owners that are buying and selling just aren't ready for.
Yeah, that's crazy. I didn't think about it from, with our company, the purchase of the company, it's like 99% digital. But when you're talking about purchasing physical assets like that, there's a lot of variables from the moment you sign to the day it gets handed to you.
Yep. And I mean, even for your business though, well, maybe not because you're mostly digital. I mean, you could still factor in things like annual software subscriptions where, hey, you already prepaid for some of their stuff that is now should be expenses for them in the future, the person that you're selling to. Or if you have physical property, real estate taxes, right? Like, well, I've already paid the full year bill, or I haven't paid this year's bill. So even though I sold in July, you're actually going to be paying for all the property taxes at the end of the year. So we've got to take that out of my cut. So prorations is a big deal at close that a lot of people aren't prepared for.
This is why you get paid the big bucks, man. This is that's really good.
It's almost like I know things. Who'd have thunk?
Yeah.
3 more for you, Jaime. Kirsten is looking to buy Big Ben's Wetland Campground, which is nestled in the middle of a protected wildlife preserve in the outskirts of Georgia. The campground has an exclusive contract with the state of Georgia to operate in the wetlands, given that certain conditions are met. Under these circumstances, which would likely be the best purchase, an asset purchase or a stock purchase?
So something's wrong with it. I'm sorry, I missed that. So she's looking to purchase this Big Bend wetlands, and something is.
It operates in a wildlife preserve that the state of Georgia owns, and the campground has an exclusive contract to operate within the preserve.
So what's interesting about this? I recently was just reading a contract that kind of discuss this, and I think this is where we're looking at the stock purchase, because I assume the contract states that the contract is between company A and company B, and if there's a stock purchase, then you're looking at company C now.
Yep. And this is exactly why sometimes we do have clients come to us where it's like, I'm thinking, great, it's an asset purchase, life's going to be good. And then come to find out they have a contract with the state or someone else where it's like, hey, if we sell, we can't transfer this agreement, and this 50-year lease on, private property or on state property can't be transferred. Well, shoot, at that point, you're looking at a stock purchase. And so that's where you can't always come in and say, yeah, client, you should absolutely do an asset purchase. And you shouldn't even probably say you should do a stock purchase. You should be saying you should talk to your lawyer about these things, because you don't want to get in trouble for playing lawyer. But those are one of those instances where we've seen it's like, oh yeah, you need to do the stock purchase to be able to keep the contracts in place that will allow this thing to keep operating.
Yep. I get it now. I see why. I see the benefit in that for sure.
Yeah. Very rare instances, but occasionally. Two more for you. At Sam's Supercharged Summer Resort, guests can ride ATVs and motorcycles through extreme terrain at their own risk. Now, many guests often get hurt, but they sign a waiver, so it's cool. As Heidi goes to buy Sam's Supercharged Summer Resort, which type of purchase is ideal for her, asset or stock?
I would say asset, I would think.
Asset. Why would you think that?
Well, I just don't see any benefit in having a stock purchase in this case. I think you're assuming all liability, and with the asset purchase, you're not.
Exactly. So here's the other thing to consider, everyone, is in a stock purchase, if Heidi were to buy it, she's inheriting the entire history of the business, which means if someone broke their femur 6 months ago at Sam's Supercharged Summer Resort and comes to sue, even if they signed a waiver, she's owning the company that person came and stayed at the property with. So the company that she just bought still is on the hook for the liability. If it's an asset purchase and someone comes to sue that they got hurt 6 months ago, she could say, cool, you actually bought from that company over there that Sam used to own. Go talk to them. This is a new company. You've got no relationship with us. And so it's a nice clean line in the sand to protect yourself from any shady misgivings. And that's not only legal stuff, but like, let's say they falsified financials. The prior owners falsified financials to the IRS. If you buy it, you're now on the hook to help resolve it.
Gosh,
versus asset purchase. Yeah. Right? Like you don't know where that company's been before.
Yeah.
A whole lot of analogies you can do there. All right, last question, Jaime. With the two types of purchases we discussed, which purchase type requires that the new owner assume the set of books from the prior owner and take over using the amounts from the business owner's prior tax return?
That would be the stock purchase.
Exactly. So I feel like we beat this dead horse crazy, but man, I can't tell you how awful it is. The clients that come to me with stock purchases and they get balance sheets that don't match, that don't make sense, or that somehow the prior owner has already figured out how to depreciate everything. You have no way to go in and say, hey, we're going to figure out a way to readjust this, do a cost seg and redepreciate everything. It's gone. You're done.
Yeah. Gosh, I can only imagine. And you would think, or you would hope that if you have a client that's doing this, they're running this by you or a credible CPA that is looking at the books and saying, hey, this looks shady. I don't know that I would recommend a stock purchase for this because there's something that's not quite right. Something's not adding up.
Yeah. So definitely things to keep in mind. And if you ever have a new client coming to you saying, hey, I'm buying a business, you should be asking this question right away, stock or asset, because that is going to set a precedent for how much world of hurt or ease you're in for. Jaime, 4 out of 6. Not bad, sir.
Not bad. Not bad. I'll take it.
And with that, we're already to Fast Figures.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
You know how it's played, but I'll give you a theme this week.
All right.
It's called What's It Worth to You? We're going to ask you plenty of questions. You got to tell me what it's worth. Here we go. What is a perfect score in bowling?
300?
What percent of the interest earned in an IOLTA account is a lawyer legally able to keep?
0.
Rounded to the nearest dollar, what is the annual fee for a tax preparer to renew their PTIN? It's either 7, 11, 19, or 26.
19.
An albatross in golf is worth how many points?
Well, it's minus 3. Minus 3, yeah.
While subjective in nature, the rule of blank states it takes this many touch points with a prospective client before they buy.
21.
What was a 30-foot Larry Bird shot worth in 1978?
Probably 2.
In Michael Gerber's book, The E-Myth, how many roles of an entrepreneur does he address?
3? I have not read that in so long.
In the Tour de France, if a rider is involved in a crash within the final blank kilometers, they will get the same time as everyone else in the group that they were riding with before the crash. How many kilometers is it?
7.
How many years of experience must a bookkeeper have to apply for a certified digital bookkeeper credential?
Oh, gosh, it's 1 or 2. It's 1.
What is the most amount of points you can score on a single play in basketball?
Oh, this is tricky. It's probably 5.
And with that, you are done, sir.
Hold on. Are we talking, is there, are flagrant fouls involved here?
We're going to go through it and we'll see how well you did. But,
all right. I'll take whatever I got.
All right, let's debrief. Yes, I wanted to see what it's worth, and I know that Jaime loves him some sports, so I wanted to throw in a few questions about it. A perfect score in bowling, yes, that would be a whole bunch of turkeys to get you 300 points. Well done, avoiding the shutout from question 1. Question 2, what percent of the interest earned in an IOLTA account, or an interest on lawyer's trust account, is a lawyer legally allowed to keep? You said 0, and yeah, they get to keep 0. Jaime, you specialize in law firms, bookkeeping for law firms, and you niched even further. What has niching down both into lawyers and then even immigration done for you when it comes to running your firm, finding clients? Like, talk me through all the benefits.
Yes, I mean, all the benefits of it is automation is probably the best thing about it. The second thing is like your employees, your contractors, whoever is working like on your staff, they just get familiar with how to work with certain clients. And the best thing about working with immigration attorneys in particular is that they are all the same. We know what to expect from them. And what differentiates them from most other law practices is that they have so much stinking volume. So instead of having like 10 open cases at one time or open matters, they're having some of the bigger firms are like thousands in 1 year at one time. And so we learn to work with that. And because of that, we're able to charge more because we're seeing a ton of transactions. But just being able to systematize things, automate things, and just getting familiar and speak the language. With immigration, it was one of those things that I worked at an immigration law firm. So I learned the language already, so much so that like I can name a couple of the forms that they work with. And so when I'm talking to a prospect, I immediately will bring something up like the N400, right? And they're like, "Whoa, shoot, this guy knows what he's talking about. Like, how does he know that? He doesn't need to know that. That's not accounting." And so it immediately just builds trust. And at the end of the day, that's what this business is all about, is having trust.
Yeah, they want to talk to someone that immediately puts them at ease. And it's like, oh, you get it. You
Yeah.
understand what I'm going through. I don't have to explain the issues. You know the issues. You're going to resolve them. I mean, you see the same thing in the hotel space.
Yeah.
For me, it's not necessarily on a compliance or legal side. It's much more knowing the players in the space, the softwares. Oh, yeah, Airbnb just did that update that effed up everyone's payouts. Yeah, we know how to resolve that. Like, just being able to speak to the common trends in the industry is huge.
Yeah. Yeah.
All right. Jaime, 2 for 2 so far. Rounded to the nearest dollar, what is the annual fee to prepare and file taxes in the U.S. and renew that PTIN? You said 19. And you're still correct. Yes, it is $18.75 right now to renew that PTIN. I don't think a lot of bookkeeping firms know how low the barrier at entry is to start preparing taxes. As you, the owner of bookkeepers.com that trains people, I'm curious your thoughts on, as AI gets better and better, what are you advising firm owners to do? Should they start learning more of the process, getting into bookkeeping, to tax prep? Should they not? Like, what's your stance on that as the industry continues to evolve?
Yeah, so I think I have a strong stance on this, and I think if somebody is curious about starting a tax business or maybe adding this as part of their business, if they're already existing bookkeeping business, I think you should do it. I think with AI and new software that's coming out, I think it's one of those things that you should really be excited about. There's a lot of there could be some fear mongering that people are that maybe are too afraid to do this are doing, but I think this is a really exciting time for our industry. And instead of being scared, I think we should all be really excited. So I do think that people can run a very successful bookkeeping business without the use of taxes or even like being a CFO. You could just have a bookkeeping business. But if you want to expand that and add taxes, like you said, the barrier of entry is pretty low. You just have to actually get your PTIN is very, very easy. It's just learning the taxes. That part's not the easiest, right? So I think if it's something that you've even slightly considered, give it a shot.
I love it. Next question. An albatross in golf is worth how many points? You fumbled around for a second before sitting on -3.
I almost
well
missed
done,
that.
sir. Yeah, double eagle, -3, birdie, then eagle, then albatross, and then the ever elusive condor after that. Just seeing how well you're on your sports, but we got to keep this rolling. So next question. While subjective in nature, the rule of blank states it takes how many touch points with a prospective client before they buy. You said 21. We were looking for the rule of 7, which some say is now outdated. It's such a subjective question that, like, there is no right answer. So you were going to lose no matter what. But I bring this up because you advise, coach with bookkeepers.com, so many people starting out businesses. And I feel like finding the first customer is the hardest, most terrifying spot of your firm. And a lot of people, I think, underestimate how much work goes into a sale. Talk to me like what you see with firms you're advising, and especially like just coaching them to find that first client.
Yeah. So, I mean, the answer is to have touch points, right? Whether it's 7 or 21. I honestly think it should be closer to 21. But like it's just a matter of getting out there, getting yourself out there. I think this industry attracts a lot of type A personalities, but are also very introverted. And so we are a little afraid to get out there. Like for a lot of people, even posting on Facebook or social media saying, "Hey, I started a business," like that is a huge feat in itself. And if that's hard, then you're gonna have a tough time because you have to just get out there. It doesn't matter who it is. If I meet somebody down the street and I tell them, "Hey, I run a bookkeeping business," like that's how you have to be. You have to have that business owner mindset and honestly just kind of get a little bit of thick skin. Like I've had so many people tell me, get lost, stop bothering me, stop messaging me. But at the end of the day, if you message 100 people and one of them comes back and says, yeah, let me hear more about this, that's a win. I don't care that 99 people told me, hey, you're a loser, don't talk to me. As long as one person it likes me or wants to hear more about it, that's a win. So I think it is a lot of work. And for some reason, that first client, it's the hardest. It's always the hardest because I think part of the battle is just getting out of your shell.
Oh, yeah. And I think even for someone like me who is outgoing, it was still terrifying to get that much rejection, because sales game, it's just like, you're not going to be the right fit for everyone at this moment.
And you
It might be
shouldn't
the
be.
right fit 6 months from now. And so you got to be ready to just constantly be planting seeds, hoping it pays off. But, however many touch points you think, quadruple it. And that's how many it's really going to take. And I know a lot of people starting out, it's like, well, I did one Facebook post and I have no clients, or I posted twice this month. It's like, it's going to take a lot more than that.
Yeah. I love what you said. It's planting seeds. We have some of the most successful students that have said, like, we meet with them weekly and they'll say, hey, I went to this networking meeting this week. I went to this one the next week. And they're like, by the end of the month, they're like, hey, I did all of this networking. And then 6 months from now, one client came because of that. And it's just planting seeds.
Yep, that's exactly what it is. Next question. What was the 30-foot Larry Bird shot worth in 1978? You correctly said 2. Yeah, they didn't put in the 3-point line until 1979, which, constantly changing the rules, which is also something us accountants got to do. But because we're short on time, I'm not getting to get into all my nitpicky examples. Next one, though, I do want to ask you about this one. In Michael Gerber's book, The E-Myth, how many roles of an entrepreneur does he talk about? I mean, you did not seem confident, but 3, getting it right. Bonus points, can you name them?
I cannot.
So he talks about the technician, the manager, and the entrepreneur. And this was a book that really opened my eyes, because a lot of times you start the business as the technician doing all the work. Eventually, you've got to learn to become the manager. And there is no moment where you get this grand title upgrade where it's very clear that your role changed. You've got to be doing different stuff. But you have to somehow internalize, hey, I have a different role now. I need to be doing different work, and communicate that to your staff. And I'm in the spot now where I'm going from manager to entrepreneur, and that's a whole different skill set as well. And how do you communicate to the team of why you're shifting your time and what you're doing? Do you often see people in your program getting stuck going from that technician to manager, or some that might ever make it from manager to entrepreneur?
Yeah, I think it's so hard. It's so hard because and even before that, you have to go from the mindset of an employee, if you were an employee before this, to being this business owner, and then you're the technician, right, for this, and you grow. So maybe you grow and you get to that point where you can't just be the one person show, and it's a lot. It's a lot of work, not just setting them up for success, but also you mentally have to check out and say, hey, I can't be the one doing this, even though I feel like I could do it faster. It's a tough, it's a mental battle.
Yeah, it's one of the hardest things, and you will never get it right on the first try. Any of the times you're going to mess it up, and then you're going to have to regroup and figure it out and get it right on the third try.
Oh yeah.
All right. 3 more. In the Tour de France, if a rider is involved in a crash within the final, I was looking for 3 kilometers, you said 7, they'll get the same time as everyone else in the group they were riding with. I just thought it was another fun sports one, because that's what I'm watching every morning, man. It's Tour de France time. I don't know about you, but I love watching that race.
Never seen it. Never kept up with it. I'm all World Cup right now, man.
Yeah, it's true. Well, for all of us recording, we just experienced the U.S. heartbreak in the last few days, and Mexico's heartbreak, and Canada's heartbreak. So, whatever. Home team's out.
Above.
All right. How many years of experience must a bookkeeper have to apply for a certified digital bookkeeper credential? You correctly said 1, and I'm going to get it out of the way because I also asked you about the most amount of points you can score in a single basketball play. It was 5 with a fragrant foul on top of the 3-pointer. Let's just get that out of the way and go back to certified digital bookkeeper, man. What are you guys doing over there at the DBA, and why is this important to close us out?
Yeah, so it's a community essentially, and the way I look at this, the DBA, it has been a passion project for us at bookkeepers.com. It's a way to give back to the community, like for the industry, and a lot of our bookkeeper launch students, we do roll them into the DBA, but outside of that, we also want to get outside of just our students, because we think we have so much to give to this industry, and what we want to do is provide a community that always has continued education. Unfortunately, or fortunately, I guess depends on how you look at it, bookkeepers do not need to have continued education. You could just become a bookkeeper. You can wake up one day and say, I'm a bookkeeper. And if as long as you don't get questioned, that's it, right? And so what we try to do is have continued education by having experts come on every 2 weeks to talk about anything as it relates to owning a bookkeeping business, whether it's marketing, the mental aspect of owning a business, or the mental aspect of switching from technician to business owner, all of the above. So it's a community that we've created to continue to give back to the industry and continue to grow. Like you, Tyler, I really want to make a change in this industry, and I want to continue to have it grow, and I want to be a part of that, even if it's a small piece of it.
Yeah, I mean, you guys got some cool stuff. You got the directory going on where people that are certified can get found. So if you want, let's say you have a prospect tomorrow. I do only hotels, and someone comes to me and is like, "Hey, I'm looking for construction." It's like, well, I don't do that, but I can recommend one of these people, and boom, I know that those bookkeepers have been through your standards. So if someone here specializes in construction, go get your name on that list. Join the DBA, get some leads coming your way, and also find competent people you can refer out other work to. I think it's absolutely a great resource. And I mean, you guys do nothing but greatness over there with bookkeepers.com and the DBA.
Thanks, Tyler. And one thing that I forgot to mention that I think is, I forget to mention this all the time, but I think we try to really make it a no-brainer. We've partnered with softwares and different companies. And when it comes to the DBA, we don't ever have any affiliate links. We want to push all of the discounts to anybody that's a member, so that if you join, you're getting your money back and then some, hopefully. That's the goal.
Yeah. Well, if anyone wants to join, dba.org, go check them out. They have discounted prices for yearly subscriptions. Really palatable, cheap, easy price, and plenty of benefits coming out of it. So love what you guys are doing over there. Anything else we need to hit on that before we close out the show?
That's it, man. Thank you so much for having me. This has been a lot of fun.
All right. Well, with that, we're off to the winner of the week. And I'll say, for the winner of the week, I know Jeremy normally does these, but I just couldn't help but be amused that State Street Corporation, which is an investment firm, much like Vanguard and everyone else, they're our winners, because the newly minted Trump accounts, if you put money in right now, all of them go into a fund that they hold. I mean, I don't know if there's collusion or anything, but feeling like only one company gets all the government deposits to hold and invest. Don't know how you got that contract, but we can't deny you're feeling like a winner today. Apparently 4 other plans are going to become options in the near future. Mutual funds, Vanguard is in that mix, as well as several others. But State Street, man, they're scratching someone's back to get that contract. And then for a loser of the week, I'm going to say World Cup players. I don't know if you saw this, Jaime, but usually World Cup players get some sort of tax exemption for playing in the United States. Canada, Mexico, and U.S. did not agree on all the different exemptions. So depending on where you played, and not even all the states gave exemptions, tax bills are coming hard and heavy. There's a great article on accounting today that we can link into the show notes. But if some of you are ambitious out there and you do accounting for athletes, you might have quite a few international players you could go after this year if you're up for it.
That's crazy. They are the leaders. I know. That sucks.
I know. Sucks to be them. Yeah, welcome to America. Here's a double tax bill, federal and state. So with that being said, want to remind everyone, every other Friday, next one coming up on the 17th, live trivia on Friday afternoons where you can win prizes. Last week, we gave away an Aura ring from Ramp, some swag from Double, and a $10 gift card from the DBA. So thank you guys for that. That being said, Jaime, we're out of time. So time to make like a river and run. We'll catch you later, man.
Bye, everyone.
Let's be honest, most of us didn't become bookkeepers or accountants to spend hours learning marketing systems and chasing leads. Heck, some of us became accountants because we didn't want to talk to people. We did it also to serve clients and build businesses we love. But what if you could get better clients without the marketing overwhelm? Well, that's exactly what Keepable does. It's an all-in-one marketing system built specifically for bookkeepers and accountants. And it works 24/7 behind the scenes to bring in leads, book consultations, and automate follow-ups. You get a professional website, branded consultation page, and follow-up automations all tailored to your business. No more duct taping tools together or hiring expensive marketing teams.
If you want to grow your firm with ease and attract better clients without doing more work, go check out Keepful today at keepful.com or follow the link in the show notes to give us a little bit of extra credit with the folks over at Keepful.